You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion. Delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. And let me remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are operators standing by.
Quiet, numbskulls, I'm broadcasting.
Well, we do have a great team when it comes to developing a financing plan or a plan to save you money. I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference, 800-306-1990, 800-306-1990. Before we get started today, let me introduce you to our featured guest. And I'm going to share with you, this is one of the topics that is probably the most frequently asked for topics on Ron Siegel Radio. Sarah Perkins is with us, Blue Water Credit. Welcome.
Thank you. Thanks for having me.
Glad to have you with us. And boy, it's a lot nicer having you. We've done business with Blue Water Credit for many, many years. It's nicer to have you. We're not going to tell Jeff that we'd rather have you come on the show with us than him, but that is what it is. Right? So,
it is what it is.
Hey, let's take a look and see what we have to celebrate today. We have something to celebrate every day on Ron Siegel Radio. Now, I've told you before that I am Jewish, so I don't know a lot of these things that they've got celebrations for today because they all say it's the day before Ash Wednesday, and I don't understand all that stuff, but when I look at some of these things, I can get behind them. Paxki Day. I don't even know if I said that correctly, but having beaten anorexia, a donut filled with it's a fried dough filled with jams, custards, or other sweet surprises going back to the Middle Ages. How could I not have known about this one? I mean, this is a big miss on our part. National Grain-Free Day. Yeah, I don't know about that one. I'm not going to even go with this one, Josh. Fat Tuesday, I resemble that remark. We're not going to talk about that one either. So let's just go to National Sticky Bun Day. Where do you get good sticky buns? I like going to Polly's Pies. They've got a great cinnamon roll, but I don't know if you call that a sticky bun. So put in the chat if you want to where I can go get a good sticky bun. I don't know. Tell me what your favorites are. Speaking of that, I don't know if we're going to say this is a favorite or not. The Dow Jones Industrial Average is now down 537 points. The S&P 500 is down 68. NASDAQ is down 236 points. Yeah, oil down 9 cents a barrel. We're getting some conflicting information here because we're not seeing the activities that we would anticipate seeing. So all the markets are talking about, the idea here is, why is the market doing what it's doing? Well, the big issue is there's two of them. Home Depot and Walmart both missed their earnings guidance numbers. That's part of it. And China and Russia may be getting together in a meeting coming up, and the markets are spooked by that a little bit. So what's causing the markets? I'm going to throw it out here that just my experience, if the market was being spooked, as many broadcasters are saying, by this China-Russia meeting, then historically what that would mean is the U.S. Treasury bond would be going up, the yield would be going down. But that's not what's happening. The 10-year Treasury is going up, the yield, which means the bond is going down. We would expect the bond price to go up. So probably being driven more by the Walmart and Home Depot issues, and maybe even by a little bit by what some of the commentary from the Federal Reserve from last week. Let's also look and see. I don't know if we even want to do this one. Gasoline prices makes me ill every time I watch them, but they continue to rise. California, average price of a gallon of gasoline, $4.74 a gallon. Josh, you keep on moving up, $4.22 there in Nevada. Processing Queen Jody, she's at $3.57. Brittany's at $4.10. And we don't even want to talk to our tremendous underwriter. Lori's at $3.09 a gallon, not leading the country right now. There's still one of the states down there that's $2.99. So I'm just looking to see where they're getting the $2.99. Oh, Texas. What's America? So they have cheaper gas in America here in the formerly Golden State. Texas, $2.99.3. And here in California, $4.73.8, $4.74. Hawaii's a dime more than us. So at least we're not leading the country anymore. But we're pushing that $5 a gallon gas. Do you think it could have anything to do with the Village People? I get in trouble every time I say that, the Village People, because so many people don't want me to say that that's also known as the presidential cabinet. That's why we're seeing some of these issues going along right now as to what's going on in the marketplace. We've got the Village People running the country. Now, the president did not select, if you listen to him, he didn't select anybody for his cabinet based on merit. Just listen to what he has to say. They had to check a box. Well, we've got Mayor Pete, who's got a lot of experience in transportation. He rides a bike, right? And look what's happening in Palestine, Ohio. Mayor Pete doesn't even know where that is, and he hasn't been there, so there's a problem right there. You've got the train derailment there. You've got all kinds of issues going on in Florida. Think about some of these things, and you've got people that don't know what the heck they're doing in the cabinet. Why did it take 12 days for FEMA to get to Ohio? Think about that. Do you think maybe it's because the Village People don't know that Ohio is still part of the country? I'm just throwing that out there. But you've got a bunch of people, a bunch of Americans suffering, and where's the president? He went to Ukraine to bring them another $500 million. What do you think that would have done to help those people in Ohio that can't breathe, they can't drink the water, although the EPA says the water's safe? Did you see the senator just push a stick through the water in Palestine, Ohio, and you get that oil sheen, yet get that rainbow, yet the EPA chief says the water is safe. I want to see him go down there and drink it. If it's so safe, why wouldn't he be the one leading the charge? I just throw that out there. I know that if I was leading something, I'd take my own advice, especially when it comes to somebody's kids, grandkids, right? Their families. Half a billion dollars. I think that town is 4,700 people. So with 4,700 people, you could put them up in some nice places while they try and figure out how to clean up this mess. It's just amazing. But elections have consequences, as President Obama put it. And, something right now, we're paying the price domestically and foreign policy. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, bringing it back to home. We've got a mortgage minute. We've got the two big issues the housing market's facing right now. What are trigger leads? Do you want them? Do you like them? Or do you want to get rid of them? We'll talk about that and more. You can reach me anytime. Off-air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less? all without having to spend more each month than you spend right now. Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
Are you paying rent because you cannot afford to live in your dream home? Are you paying rent because you don't believe you have the down payment funds to purchase your own home? At Siegel Lending Team at ronismylender.com has up to $25,000 to help qualified people purchase their own home at amazing interest rates. Contact the Siegel Lending Team today at ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037. ronismylender.com.
Homeowners over the age of 62 are taking back financial control after retirement with reverse mortgages, and the Siegel Lending Team is here to help you use it to your advantage. Call Ron Siegel with Geneva Financial to receive your free information booklet with no obligation. The booklet answers all your questions, and the best part is, you still own your home. Call Ron Siegel at 1-800-306-1990 or visit ronsiegelradio.com.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. ronismylender.com. Again, ronismylender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. So what were the loans doing on Friday? Markets were closed yesterday. 30-year conforming loans, 6.518. Jumbo loans, 6.32, up a little bit. FHA, I'm sorry, those are down a little bit. The FHA loans, 6.395. Those were up a little bit. The USDA loans, rural areas, generally no down payment, 6.423. That was down a little bit. And the best loan on the market for those that earned it, that would be the VA loan at 6.197. It was up just a little bit. So let's take a look at what the markets are doing right now. We talked about this a little bit in our opening segment. S&P 500 is now down 68 points, 1.67%. Let's see if we can find the 10-year Treasury. I think my computer's going as slow as I am today. So 10-year Treasury is up 7 basis points. Mortgage-backed securities are down 58 basis points. That means interest rates are up once again. Ow! Why? So let's take a look and see what's driving this market. So let's see what we can find here. It always comes down to it. Existing home sales tracks closings on existing homes decreased by 0.7% in January at a 4 million unit annualized pace, which was below the 4.1 million estimate. Supply was up 15.3% from a year ago, and the median existing home price was at $359,000. Remember, that's a national number. Here in Southern California, Northern California, wherever you might be, the numbers are going to be different for your area. It's a 1.3% rise from a year ago at 131 months of consecutive year-over-year increases. This is the longest running streak on record. That's part of the issues. Obviously, we talk about the geopolitical issues that I mentioned in the earlier segment and leading economic indicators. The Conference Board's Index of Leading Economic Indicators came out for January and fell 0.3%, which is the 10th month of decline in a row. When looking at the 6-month growth rate on an annualized basis, it's down 7.4%. When this number breaks beneath 0%, it's a warning signal. And when it breaks beneath 4%, -4, it's a recession signal that has been extremely accurate historically. Conference Board stated that they believe the U.S. will enter into a recession in 2023. Only 6 times in the past have we seen anything like this, and each time the economy slipped into an official recession. That'd be 1970, 73 to 75, 80 to 82, 1990, 2001, and 2007. Historically, a recession begins on average 13 months after the LEI peaks, and being that it peaked in December 2021, the recession should be upon us or starting soon based on the average. If we do in fact see the recession-like conditions, we will see economic activity slow and interest rates will move lower. Again, no guarantees. That's just based on historical issues. Think about that. So rates go down. There's going to be more demand for properties. As there's more demand for properties, we get back to those bidding wars. And again, you get to have trouble trying to find the home you want. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call. 800-306-1990, 800-306-1990. So for many, many years, we've on Ron Siegel Radio, one of the issues that we've come across over and over again is we never tell somebody they cannot that we can't do a home loan for them. Unless they're fraudulent or something like that, then obviously we're not going to get involved at all. But some of the issues that get involved with people is, maybe their credit scores are too low. How do we deal with that? Well, we talk about a game plan. And for many, many years, our game plan has included our friends over at Blue Water Credit because they do a great job for people, helping them correct the credit report. And they're not the ones out there going with this bogus fraud stuff that, sending a letter out saying, oh, it's not my debt. Well, hogwash. If it's your debt, it's your debt. But the fact of the matter is, it's kind of like I kind of look at Blue Water Credit similar to a criminal defense attorney, right? If somebody goes out and commits a crime, well, the attorney's job is not to say they didn't do it. The attorney's job is to make sure that their constitutional rights are adhered to. Well, our friends at Blue Water Credit do the same thing on the credit side. They make sure that the law is followed and that everything that on the report is done in a legal way. So let's chat this morning. We've got Sarah Perkins at Blue Water Credit with us. Welcome.
Hello.
Glad to have you with us. Am I right about that? I mean, you guys aren't just going out there saying it's not mine and fight over that issue.
Yeah, no, that's probably one of the worst ways to do it because they're going to come back on your credit report. They usually fall off for about 30 days and someone thinks there's home free, paid all this money, and next thing you know, it's determined not fraud, and then they're right back where they started from.
Yeah, it's so it's a short-term fix for something that could be done correctly the first time.
Absolutely.
So let's start off. 4 biggest mistakes of credit. Give me. Let's run down those to start with.
So number 1 would obviously be paying anything late. Late payments, your payment history, making an account derogatory is one of those things that's going to drive your score down. One account can maybe do it as much as 80 points and multiple accounts as many as 175 points. So you want to make sure you're paying your items on time, setting things up on auto pay. That would probably be the number 1 mistake that people make.
So let me throw this at you because I got in a bit of a debate.
Mm-hmm.
So knowing that you and I were going to be chatting today, yesterday I sent out, maybe 10,000 messages. And I said that there is a method if you pay your credit card bills strategically, it could potentially raise your credit score 150 points. And my thesis was go online before the statement closing date and pay off your credit card bill or pay as much as you can to minimize your utilization. And I had a lot of folks saying, that doesn't work. And I thought credit utilization had a pretty significant impact on your score. Am I right or am I wrong?
Yeah, it's the second biggest category when determining the FICO score. So yeah, if you can determine when those balances are going to be reported to the bureaus, obviously we tend to correlate it with the statement date. That's usually when they're going to report it to the bureaus. And so if you can get it paid off before that date or work with your creditor to see when it is reported and pay it down so that keeps that utilization low.
Okay, so I'm not going to mention any names. I win, but I thought I did because I've learned. So as a mortgage person for the last, I think I helped the first family in 1983. So yes, I am old. You learn a lot by looking at credit reports, and I actually use a service, and I don't know if there's a better one or not, Sarah. I use myfico.com to monitor my personal credit scores. Because then I can actually see, okay, if I paid this on this date, then this is what's going to happen. And if I pay it on that date, that's what's going to happen. Is there someplace better to go than myfico.com?
Actually, MyFICO is typically where we recommend our clients to go. It's really the only place besides having a lender pull your credit, which then we were talking about inquiries and possibly affecting your score, but where a consumer can go, pull their own credit and get a pretty vast report of all the different scoring models and where they sit with a mortgage score, auto score, credit card score, because there are a lot of them out there and can be confusing.
Okay, so I should have done this, Josh. I didn't say it before. rsrccpayment.com. If you want to know exactly what Sarah and I were talking about before on paying your credit card bills strategically, rsrccpayment.com, rsrccpayment.com. That's the way to get that information right there. So, okay, so we were talking about the top 4 biggest credit mistakes. Paying late, obviously, is, I love the idea of what you said there, Sarah, because the idea of auto pay. Expand on that a little bit, if you would.
Yeah, I mean, we all have pretty hectic lives. I mean, if you're still sending things the old-fashioned way with the mail, that's not very reliable. Take it, the thought process out of it, have it set up on auto pay. So it gets paid on that due date and you're not risking, having a late charge because you simply forgot. Life got crazy.
Yeah, that makes it a lot easier. I like the idea of not having to think.
Yeah.
Right? I mean, because the fact of it is, and so the other one that I've heard a lot on, and I'll throw at you because you're the expert, I'm just the radio host. So pay your credit card bills twice. And what I recommend is once again, right before that statement closing date. And then I like the idea of having that auto pay right before the payment due date. Whatever you think your minimum payment's going to be on a regular basis. So every month you're sending on auto pay $50, $100, $200, whatever your minimum is, but make the biggest part of your payment right before the statement date. So you're making 2 payments a month. Is that good, bad? Does it matter?
I think it kind of is like the idea behind making the extra payment on your mortgage. You're going to pay it off a little bit faster. And maybe it helps break it up between pay periods. Maybe you can't afford, one big chunk on a certain date. So if you can split it up and do it twice during the month, even better.
Yeah, that makes seems to make a lot of sense to me. I'm glad that I'm getting the same answer from the expert. We got a lot to go over with Sarah Perkins of Blue Water Credit. We're going to talk about who is a good candidate for credit repair. We're going to talk with Sarah about that one. Whoa, I don't know where I just got that. I don't know if even that went through, but hopefully it didn't. But it buzzed my ears. The 2 big issues the housing market's facing right now. You can reach me anytime off air, number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference in the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. Fourth tab over, you find the value of your property. First tab, you're going to actually find out what properties are available for sale in 97% of the United States. And best of all, it is free to you. Two big issues the housing market's facing right now. Biggest challenge housing market's facing is how few homes there are for sale. Mark Fleming, chief economist of First American, explains the root causes of today's low supply. Quote, two dynamics are keeping existing home inventory historically low. Rate-locked existing homeowners and the fear of not finding something to buy, unquote. Let's break down these two big issues in today's housing market. Rate-locked homeowners, according to the Federal Housing Finance Agency, FHFA. The average interest rate for current homeowners with mortgages is less than 4%. Less than 4%. But today, the typical mortgage rate offered to buyers is over 6%. And I just shared with you that as of Friday, conforming loans 6.518. 6.518 was what the loans were locking at on Friday. Doesn't tell you how many points there were to get that. But if you're watching us on RonSiegelRadio.tv, any of our socials, or the ABC News and Talk AM 1490 video feed, you're actually seeing a chart right now of the average mortgage rates that are less than 4%, which is actually the exact number is 3.8%. 40.8% have a mortgage rate in the threes. 40.8%. Today, the typical mortgage rate offered to buyers, again, over 6%. As a result, many homeowners are opting to stay put instead of moving to another home with a higher borrowing cost. This is a situation known as being rate locked. When so many homeowners are rate locked and reluctant to sell, it's a challenge for a housing market that needs more inventory. However, experts project mortgage rates will gradually fall this year, and that could mean more people will be willing to move as that happens. The fear of not finding something to buy. The other factor holding sellers back, is the fear of not finding another home to buy if they move. Worrying about where they'll go has left many on the sidelines as they wait for more homes to come on the market. That's why If you're on the fence about selling, it's important to consider all your options. That includes newly built homes, especially right now when builders are often offering concessions like mortgage rate buydowns. That's also what we call at Ron Siegel Radio payment assistance. Go to rsrbuy.com, rsrbuy.com, and you'll be able to understand what this buy down program is. Be sure to work with a local real estate professional to explore the options you have right now, which could include leveraging your current home equity. According to Adam, quote, 48% of mortgaged residential properties in the United States were considered equity rich in the fourth quarter, meaning that the combined estimated amount of loan balances secured by those properties was no more than 50% of their estimated market values. This could make a major difference when you move. Work with a local real estate expert to learn how putting your equity to work can keep the cost of your next move down. Bottom line, rate-locked homeowners and the fear of not finding something to buy are keeping housing inventory low across the country. But as mortgage rates start to come down this year and homeowners explore all their options, we should expect more homes to come on the market. That is the Real-Time Real Estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Visit rsrhomescout.com, rsrhomescout.com. And if you have any friends, family, or coworkers looking to buy, sell, or borrow on real estate, can I count on you for an introduction? Just our little ask there of you. Continuing our conversation, Sarah Perkins is with us, Blue Water Credit. Got a lot to chat about, and we didn't get to very much of what we wanted to talk about. Sarah, I get a lot of people. I just got this one in that messages I got back from folks yesterday when I sent out about our payment plan. I've got my FICO score, their comment was, my FICO score is 869. Does that give, I thought that was a bit above what the cap was, but again, you're the expert. 869, does that give you any indication of what might be going on here?
It's probably not the FICO mortgage score. So that there's different scoring models within FICO. And then there's even the Vantage score, which is what you typically see on like Credit Karma. And all of them have different ranges. So if someone's telling you that, they're most likely not looking at the score that would be the most important for obtaining a mortgage loan. So
would I be right in saying my comment for Credit Karma, Credit Sesame, all those others, is they're really FICO scores. They're not FICO scores.
Yeah, they're educational purpose is what we call. We kind of compare it to the Zillow's estimates if you're in the real estate market. You know, they're as good as that. And they can be off 100 points one way or the other.
So when I say that Zillow just gives you the wrong value, we can say that Credit Karma is doing the same thing.
Absolutely.
So is in your experience, would Credit Karma be moving in a similar direction as my FICO score? So my FICO score is improving. Could I assume or should they go the other way around? If my Credit Karma score is improving, I know it's not going to tell me my FICO, but is it fair to say that my FICO might be improving also?
Possibly. They put different weight on different categories. So we know a credit score with FICO, it's more heavily weighed on if you have derogatory accounts and credit utilizations, where Credit Karma is going to put different weight on how long maybe you've had the accounts open and the actual balances that you're carrying. So it just depends on what category you're improving or, not improving in.
Now, I've watched on Credit Karma that a lot of what they're doing, their main purpose, they tell everybody it's free. Yeah, nothing, and there's no free lunches. Their real purpose is to try and sell you their credit card services, isn't it?
Oh, absolutely. I mean, yeah, they're running ads. I see it all the time when I check mine. I mean, really all that it's good for, or what we tell our clients, it is a free service, but it's a way to monitor your credit and seeing changes going on if something all of a sudden pops up that you're not aware of, so you can stay on top of those changes.
So it's so basically, you're getting what you pay for. Free advice is generally exactly what you pay, worth what you paid for it. So just be aware of that. So that's one of the biggies right there. I want to throw this one at you. There's got to be a little trick to this trade. If I needed a real quick hit on my credit score, is there something I can do that might be the quick way of getting my score up maybe 40, 50 points?
I would say that probably the biggest impact that you have control over is paying down a balance on a card. And if you're limited on funds, take that lowest balance card that has the highest utilization and target that one first. So a $500 maxed out card is going to hurt you in utilization, the same as a $10,000 maxed out card. So that's what we tell our clients. If you're limited on funds, pay down that $500 one to $50. Get it down to that 1 to 10% range.
Now, what about our really, really challenged people? If they go and try and settle a debt, is that going to help them, hurt them?
Well, it depends on the age of the debt. So anything that is been less than 4 years, at least in California, that's still within the statute of limitations where somebody can be legally sued, we always are recommending settling those debts. We do offer that service at Blue Water Credit where we have an inside connection with, how low they will go. And some of these agencies will actually give you a deletion along with saving the money and settling the account.
But we hear so many of them when I've talked to people, they said, well, I called and they said they're not allowed to delete that from my credit report. Is that
Correct.
true?
Correct. So by law, they are not allowed to remove correct information, but they're deeming it correct. So what we do at Blue Water Credit is we actually look to see how it is reported, and we're looking for those inaccuracies, erroneous information. And then that's what we are skilled to see and be able to have the accounts removed that way.
Now, in the past, when Jeff and I have spoken, it used to be that nothing really has to be on your report, but if it's there, it has to be complete, accurate, and verifiable. Is that still the same rules?
Yes.
Okay, so there's one of the issues. What about these boost, Experian Boost? Does that help us, hurt us, especially when you're looking at people trying to get a mortgage?
So there's a couple things with Experian Boost. I'm sure everybody's seen the commercials on television, but really it's only affecting your FICO 8 score. Again, so if we're talking about a mortgage score, it's going to not have any effect on that FICO score. What you're essentially doing is giving Experian access to your bank account. They're going to then pull out information from your bank account and look for trending data, who you're paying on utilities, maybe it's Netflix, and they're going to add those kind of things to your report, rental history. But again, those kind of things are, as of right now, are not recognized by the FICO model that the mortgage industry uses. So if you're maybe just looking for a boost, it could help you maybe secure that credit card or maybe get you in a rental that you might need to get into.
That's fascinating. I never realized that it's that you can't. It's not going to hit the model for the mortgage side. So it's completely irrelevant there.
Yes.
Yet the commercials don't quite tell you that. The part of it that I've looked at, and again, having looked at credit reports for more decades than I care to mention, is that as a lender, and I do lead a lending team. So lenders, we look at the middle of the 3 scores.
Mm-hmm.
If the Experian score was already the highest, it's really irrelevant how much higher it goes, isn't it?
Yeah.
So we want to really deal. So when you're looking at somebody's report to see if they are a candidate for credit repair, are you dealing with all 3 bureaus, or are you really just targeting, 1 or 2?
We are still going to target all 3 bureaus. We are going to listen to what the client is trying to achieve, or what their lender tells us. Hey, we need to reach a score of this number within this bureau. But we find it most effective to send out the disputes on all 3 bureaus and all the accounts all at the same time instead of targeting just one, because then you're going to be stuck in a program a lot longer. Where Blue Water Credit, we have you in and out 4 to 6 months max, where I think the national average for credit repair is like 13 months or more. And usually it's because they're just doing target disputes.
Yeah, you're too kind there. Actually, it's not because they're doing target disputes. It's because you're on a monthly billing plan and they want to keep you in the program longer. I won't say anything about the one that's got the name from Kentucky, but that's a whole different issue. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, more with Sarah Perkins, who's a good candidate for credit repair, and what are trigger leads. Now, in my day, trigger was a horse, but that's a whole different issue. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Better Outcome segment today being brought to you by mycdlp.com, mycdlp.com. If you have not got the Divorce Your Mortgage Workbook, it's free, mydymworkbook.com, mydymworkbook.com. What are trigger leads? That's what I asked this morning in our question of the day. What are trigger leads? And do you want them or do you want to get rid of them? Well, I'm going to suggest to you there are a few people that are very lonely, and they probably might like to have trigger leads. The rest of us, maybe we don't want trigger leads. What is it? Well, when as a mortgage lender, or maybe any other, anytime you go and apply for credit, the credit bureaus, do they make money off of you? Do you write a check to the credit bureaus? Most of the time you don't. Mortgage lenders do, and credit card companies do, auto companies, they do. So what happens is when you go out and apply for a car loan or a mortgage loan, well, car dealers or mortgage people are going to go and buy that data from the credit bureaus. That's how they make their money. So they buy that data, and guess what happens? Or if you go to somebody like Lending Tree, their whole thing is about selling data. So when they go and you put your information, you apply for a mortgage, your information is going to be sold over and over again. Your phone will automatically start blowing up. I recommend if you're going out and getting a car loan, maybe you want to go to Google, get a Google Voice number and use that instead of your real phone number, because your phone numbers are just going to blow up. Your email is going to blow up. You're going to get all kinds of leads. You're going to get all kinds of mail from credit card companies and whatnot, insurance companies. How do you deal with that? I've talked to you about this many, many times. My favorite, optoutprescreen.com, optoutprescreen.com. That's one of the ways. Before you even apply, go to optoutprescreen.com and get registered there. I think you can register on there free for 5 years. Okay, that's one of the issues. The other one, go to www.donotcall.gov, www.donotcall.gov. And get yourself on the do not call list. Is it going to work? Sometimes. But legally, companies are not supposed to be soliciting you. And there was actually just one of the big phone marketing companies got a major, major fine just recently because they were not scrubbing phone numbers against the do not call list. So by law, they're supposed to do that. That's the Better Outcomes segment brought to you by mycdlp.com. That is mycdlp.com. If you're going through divorce, I'm sorry, but mycdlp.com might have some great information for you. Continue our conversation. Sarah Perkins is with us. Blue Water Credit. Sarah, did I miss anything on that do not call discussion?
No, the only thing that we let people know is it can take up to 5 days. So if you can pre-plan it before you know you're going to run credit, or if you're working with a lender, be a little bit proactive, because it can take up to 5 days for it to go into effect. So although the application process is super quick, like 2 to 3 minutes, for it to really go into effect and not become that trigger lien, you're going to want to give it 5 days.
Wow. Okay. I'm learning something new. I love it when I have people come on that can educate me. So I didn't realize that it's 5 days for that to take effect. So that's good information right there. So, I used to tell people all the time that I questioned the validity of having the right documentation for a collection when it had to do with medical and fighting with the HIPAA laws. Is there something new going on with medical collections that we should know about?
Well, it did start last year where the bureaus got together and decided that paid medical collections were now going to be automatically removed from the consumer's file. So before, even if you paid these debts, or they would still linger and they would still have an effect on your credit score. So this is really helping an underserved population that maybe was having some difficulty paying the medical debt. They also changed the time frame that they had to try to resolve it before they can even report it in the first place. So it went from 6 months to 12 months. Again, giving someone a little more time to work with the medical provider or the collection agency before it even has a chance to hit your credit report. And then most newly coming up, I believe starting in August of this year, if the balances are $500 or less, those are also going to be automatically removed from someone's profile.
So now if they show up, is that a time when someone needs to, if it's under that $500 and it's past that August time, is that something that you could help somebody with over at Blue Water Credit?
Absolutely. So those are the type of things that we can help. We actually have a direct portal with TransUnion. We can get those kind of items actually deleted in a matter of minutes, where you can run a new credit report that same day and it's like it never was even there. So it's perfect for someone that maybe just needs a jump in the TransUnion score. The other ones can take a little bit longer to go through that process.
Now, if we run a second credit report that day after you've got that TransUnion cleaned up, is that going to be another inquiry on there, or is that going to change anything?
So with rate shopping, they have it where you have 30 days to rate shop with the mortgage company. So as long as you're within that 30 days, it's not going to ding you any more than the first one did.
Okay, so not gonna hurt us too much right there.
Yeah.
So is there some sort of a secret? I mean, does everybody understand, or is it public knowledge what's going on to maximize your credit score? Is there some sort of a inside baseball that you can share with us?
Everybody tries to figure out what the FICO scoring model is. Nobody has the exact, do this and this will happen. We have an idea just based on what we know, how they weigh certain, categories. We've determined that the sweet spot is probably between like 2 and 3 credit cards, having a mortgage or an installment loan on your credit. Length of credit is big. We don't want you guys closing those old accounts, even though maybe you're not using them as much. The length of credit history that you have is also very important. We talked about inquiries, and then just a variety of credit.
Okay, so you want to have that variety, and do you coach people on that?
Yeah, so that's something that we can do through the consultation. So, a third of the people that we talk to just aren't good candidates for credit repair. Maybe they don't necessarily have any derogatory accounts on things that we are able to dispute, but we can give them an action plan as far as, what accounts to pay down. Give them links to some secured products. We have some great ones that goes to either a secured credit card or one that's an installment loan, or it looks like an installment loan where you're actually paying $15 into a savings account to yourself, but it reports like an educational loan on your credit. And those typically take about 7 days to report on your credit. And yeah, we always hand out those links to anybody that contacts us. And then, yeah, if they are a good candidate for credit repair, then, we would get them enrolled and assigned to a case manager.
Now, is that are those type things in the newest version of the Blue Water Credit Repair book?
Yeah, so we do have a new ebook that just came out, the 2023 credit ebook. So anybody is welcome to go to our website at bluewatercredit.com and download that ebook, and it has a lot of great information on those kind of tips of things you can do on your own.
And if you either go to bluewatercredit.com or you can just send us an email, rj@ronsiegelradio.com. We've got a plenty of ebook copies here that we can send you, which I think it's just one copy that we send out and it's over and over again. So either way, you can get that. You can get Sarah's book right there, and from our friends over there at Blue Water Credit. So it's great stuff. Now, it says something here about credit reports. What are you guys doing with credit reports? I understand credit reports have gotten really expensive this year.
Well, one good thing, if you can say anything good happened with COVID, is with free annual credit report.com. You used to get one credit report from each of the bureaus once a year. And that was, it didn't give you a score, but it gave you a very detailed, look at what's going on with your credit. Well, with COVID, they upped that to once every week. So instead of relying on, Credit Karma or some of the other monitoring systems, you can literally go to annualcreditreport.com once a week, pull all three bureaus. Again, you're not getting a score, but it's going to help you navigate what is on your credit.
So do you recommend that if somebody's retained Blue Water Credit, and what does that even process look like? Who's the right person? How do you decide whether it's a good fit for Blue Water and for any of our listeners?
So, we obviously need a credit report to look at. So if you're working with a lender and they're able to share that with us, otherwise, doing something like annual credit report, or we partner with IDIQ that gives a great, just streamlined report of all three bureaus. And what we're looking for, a good candidate would be, clients that have collection accounts, late payments, the medical collections that we talked about, maybe even an ID theft or having a public record like bankruptcy. Those are all things that we can work on. And maybe they just need straight debt negotiation. So that's a service that we can couple with the credit repair, or it can be a standalone service if you're just looking to try to get out of debt with some, overdue bills.
Boy, we could probably open up a whole can of worms with ID theft. We don't even have time to get into that one. What does it cost to get started?
So there's nothing for just the risk-free consultation. We can either do an action plan if you're not a good candidate for credit repair, and do a extensive report of, do this, and that. If you are a good candidate for credit repair, it is on a flat monthly fee. On average, $180 per month. We do discount if you come in as a couple, which can be a spouse, a sister, a cousin, whoever it may be. You are not bound by any contract. It is month to month. And like I said, on average, most clients are in our program 4 to 6 months max. But you're working with a dedicated case manager who is reviewing the updates with you and letting you know, hey, this is the goal you need to reach. That's all we need to do. We're going to let you go. If you want to come back later and try to work for that coveted, 800 score, we can work with you later. But, we're really there to just get the client in and out so they can get into the loan product that they're trying to get into.
So, and I can share, and I don't work for Blue Water Credit. I don't get paid by Blue Water Credit. I've been sending folks over there for many, many, many years, and great success. You can't say that about all the credit repair companies out in the marketplace. I can't say it. And I'm sure Sarah's not going to say it because that's her competitors, but I'm a consumer advocate and I don't care. At Blue Water Credit, I know for all the years that I've been working with them, people go to them. They love the service. They love the communication. They love the education, and they achieve their goals. They don't, a honest credit repair company can tell you what the challenges are from your report, but they can't guarantee results. That's not what happens from an honest company. You can get the other one out of Kentucky with a Kentucky name. They're going to tell you that this is what's going to happen. And what are they going to do? They're going to dispute 1 or 2 items every month and keep you in the program for 12 to 18 months. And they're going to say, oh, we're a lot cheaper than the other guys. Well, you haven't bought your house. You haven't bought your car. And you're paying their, I don't know, $70, $80, $90 fee for the rest of your life. Not the idea with our friends over at Blue Water Credit. I don't bring on people just lightly. I've had a great relationship with the company for many, many years. I think you'll be happy with them as well. Blue Water Credit, they're the ones that we team with at Ron Siegel Radio. And as always, I ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh and Sean who are engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.